Hi, this is Bryce Crocker, Chief Executive Officer of Jervois Global, and pleased to be presenting, albeit virtually today. First slide here just provides some background in terms of what we're looking to create here at Jervois. So essentially, we're a group of executives that have come out of large mining companies, Glencore, Xstrata, Rio Tinto, etc. And we do see that there's a unique opportunity in equity capital markets, particularly to start with something which was small. And Jervois was very small when we started, around a tenth of our current market capitalisation, or a 20th of our current market capitalisation of $750 million as we start to build out the team and build out the assets. So there's some news flow on the top here in the yellow of company milestones as we've undertaken, I guess, three key transactions: the acquisition of the Cobalt, which owns the Idaho Cobalt operations in the United States, a part-constructed cobalt mine. Will be the only cobalt mine in the United States for generations. The San Miguel Paulista nickel cobalt refinery in Brazil, currently owned by Votorantim, and also just recently the acquisition of Freeport Cobalt from Freeport McMoran for around $190 million. And obviously a number of equity raises and debt raises associated with those. We just completed a $235 equity raise, fully underwritten by UBS and Jefferies. And prior to that, also issued a $100 million bond to finalise the construction of Idaho. On the bottom are the corporate hires, and I guess Peter Johnson and I have been building out the quality of the team since we both joined. Peter was Glencore's global head of nickel assets, sat on the executive committee for a long time. So Peter Johnson's our chair. And I guess we brought on a number of ex-colleagues. Greg Young, one of the founding partners of Glencore, ran the USA business, was co-CEO and ran the Stanford office of around 55, 60 traders, background in ferroalloys, nickel, cobalt, etc. And also one of his other colleagues, David Isroff, again, founding partner of Glencore. And he ran ferroalloys, nickel, cobalt globally, and also was a director of Xstrata. Ken Clarkson, General Counsel at Glencore, now our General Counsel. Michael Rodriguez was Operations Director at Murrin, now works for us on the technical side. James May has joined from Rio Tinto as CFO, and then a number of traders: Klaus Woolhoff, ex-Xstrata, Wade Yeoman, ex-OMG. The calibre of the team that fortunately I'm able to call on is very, very high, because we do think that there's a unique opportunity to get a group of people together. We've worked together for a long time. Peter and I guess, since 2004, when Xstrata did a hostile bid for WMC, and Peter provided the team essentially that was part of that process, given that he ran the nickel division previously. So I'll move on, but certainly the calibre of the team we've got together is exciting. I've touched on the assets, so I don't propose to spend a great deal of more time here, aside to say that we will participate in a different section of the value chain than your typical company that would be presenting here. So most companies our size, if they want to get into refining, they don't really have the capacity, the expertise. San Miguel Paulista will be the fourth nickel cobalt refinery that we've operated. As I said, Peter Johnson ran the WMC nickel division, which included the Kwinana refinery that Michael Rodriguez was also at. We constructed and operated Murrin, the HPAL facility in Western Australia, owned by Glencore. With the acquisition of Falconbridge, we ran Nikkelverk, the preeminent nickel refinery globally, based out of Norway. 85,000 tonnes, 90,000 tonnes of nickel, 4,000 or 5,000 tonnes of cobalt. And now San Miguel, which is a sister plant to Harjavalta, the Norilsk facility, 25,000 tonne nickel capacity, 2,000 cobalt. Closed in 2016 when another mine that Votorantim owned, called Nickelangia, was shut due to low prices and maturation of the resource base. And so we're looking to restart it based on materials that we used to sell into the facility previously in our prior lives. And Freeport Cobalt, a recent acquisition, really exciting. Crocker is the preeminent cobalt refinery complex globally. So we've acquired a downstream cobalt manufacturing business from Freeport, together with associated contractual structure around that refinery, where we have 40% of the capacity essentially dedicated for Jervois. So we're unashamedly kind of focused on that customer front-end facing aspect of the business, and particularly the trading side, just given our backgrounds. I touched a little on Idaho. So Idaho is small, and that's what we like, because it's executable. And it's essentially there's been about 100 US, a bit more, about 120 that's been spent over the last decade by prior owners. We've got about $90 million to go to finalise construction. So as you can tell from the overhead, it's a part constructed mine. So it's high IRR, low capital, low execution risk, and fully funded. In terms of the schedule, we'll be in commercial production within 12 months, which is another key attribute for the business. High capital, long lead time projects with long ramp up schedules. That's just not where we see equity market outperformance. I touched on San Miguel. Again, it's based in Sao Paulo. So essentially it's Sao Paulo is obviously, I think it's the second largest economy in Latin America after Mexico in terms of scale, 40 million people. We've got great logistics. We're about 100 kilometres from Santos Port. You can actually see the highway that runs from the port that goes alongside the photograph of the plant there. So as I said, we're really running a process where we're going to restart the refinery in 2 stages. So stage 1, basis materials that's processed in the past, primarily mixed hydroxide, also with cobalt hydroxides, and then looking to install a small autoclave to leach sulfide-based concentrates, including those from Idaho and also third parties that we're in negotiations with now. This would be the only nickel cobalt refinery in Latin America. So very, very powerful market position once we're up and running. And obviously Brazil, with the depreciation of the real, very competitive jurisdiction to be in. Plan for San Miguel, as I mentioned, the restart plan is based in stages, stage 1, stage 2, and we're moving ahead at pace there with the feasibility study due out at the end of the third quarter for stage 1. Stage 2 feasibility study by the end of the year. Touch on Freeport Cobalt, rebranded Jervois, Finland, is enormously exciting. We've got essentially what I believe to be the preeminent cobalt facility globally. So when Freeport sold Tenke, it was always a matter of time as to when this facility was also going to be divested. So Tenke is a copper mine in the DRC, produces around 15,000 tonne of cobalt in hydroxide, similar output or identical output to the refinery and the downstream manufacturing plant. So Freeport looked to sell to Umicore, weren't able to sell to Umicore for a variety of reasons, primarily the structure of the market. And so they sold the refinery to Umicore. They retained the vast majority of the downstream business, which we are now purchasing. And then we're purchasing, I guess, really 3 groups of contracts, if you like. There's a 40% tolling contract through the refinery. So we control the units going in, we control the units going out, we control the economics of that refinery capacity, most importantly. And then there's a group of long-term cobalt hydroxide supply arrangements from leading tier 1 suppliers, significantly in the money, extending out for up to 10 years. Then there's also a contract book of essentially every major consumer in Japan, Europe, and the United States of advanced cobalt products has a commercial relationship with this facility. It really is the preeminent supply facility in the Western world. So we've purchased, as I said, for about $190 million, including working capital. The facility is generating around 20 US of EBITDA in 2020. As you can see, we're projecting around the same in 2021. But the risk is asymmetric in terms of pricing. So if you look when cobalt prices went on a run in 2018 up to $35 a pound, this facility generated around $85 million of EBITDA. So it's got that down. We're essentially buying at the bottom of the cycle, but then with this significant upside optionality associated with the way that the facility is structured to take advantage of higher cobalt prices, which we're really excited by because clearly we're looking to create a vehicle that can provide investors that exposure. So I just returned from the facility for closing. So the Jervois flag is flying over the Crocker industrial complex alongside Umicore and Boliden. And we're really excited to be part of the Finnish battery raw materials supply chain. The government's obviously very supportive and very ambitious in what they hope to do in terms of the European supply of advanced products to support the OEMs as they also expand their car production in Europe. The Crocker, as I mentioned, it's in an industrial park, strong access to utilities and other consumables. And I've touched on the nature. So we take a raw material, cobalt hydroxide, we convert that through the Umicore refinery into a liquid refined cobalt product. That then gets upgraded into a number of niche products, powders and chemicals, and then we sell those to end users around the Western world. So some of the advantages around the business, I mean, it's just compelling from our perspective as traders and as with a strong commercial bias. The flexibility that this now gives us across the 3 sites is just profound. We've got an opportunity. The tolling contract we have through the refinery is 6,250 tonnes. The back end capacity of the downstream plant we purchased is 11,000 tonnes. So the opportunity to get additional Cobalt units going in to take advantage of that latent capacity at the back end, we're really excited by, including potentially from San Miguel once we restart there. This asset just really does provide us a platform that gives automatic kind of credibility and critical mass. We're no longer buying just 2,000 tonnes of cobalt hydroxide to put through San Miguel polyester. We're buying 8.5. Scale in this industry matters, presence matters, and this really does put us at the pointy end of what I think is going to be a really exciting location in terms of the way that the European industry unfolds in this area. In terms of growth potential, I've touched on the 11,000 tonnes you can see in the middle slide there. I mean, this is really, we've got strong customer relationships. We've got an excellent ability to grow over time. Obviously, the outlook for cobalt looks really, really exciting. And this is around 1,000 to 1,500 tonnes of the capacity from the refinery that we access currently is through the recycling business, which is a really exciting and profitable stream that certainly we want to look to expand on and also introduce that down into San Miguel. Something that's less quantifiable but certainly exists is the ability to de-risk San Miguel. So we're restarting San Miguel to produce Tocantins. It's the metal that the facility produced historically. So electrolytic nickel, 99.9, above LME, really high purity, not quite a Falconbridge grade, the product we used to trade, but certainly up there in terms of aerospace and battery use for advanced chemical uses, and then also the broken cathodes that we're looking to produce there. So there's an opportunity to really integrate these. We're not about buying a disparate portfolio of assets that have no operating relationship to each other. We're about building an operating business, and this is a fantastic start. So we're the second largest producer of refined cobalt outside of China. That's an exciting market position, gets us the presence, and certainly I think as we move forwards, we look to expand this footprint that we've developed on the cobalt side, but also obviously step out into nickel in a much more meaningful way once San Miguel polyester is also open. I won't touch for long on cobalt other than the outlook for cobalt just looks pretty fantastic. It's not often you get a commodity that's going to grow at double digits on a compound basis for decades or more, and that's certainly where we see cobalt sitting today. In terms of the business drivers, I won't go through a lot of the detail here. I think that you can go through them in your own time. Maybe if I just touch on the financials, if you look at the pro forma EBITDA here, you can see the 80-85 that I mentioned in 2018, moving down to the $20 million at what we perceive to be the bottom of the earnings cycle. The targeted EBITDA we've agreed with Freeport for the earnings earned out is $40 million, at which point they get $10 million additional consideration up to a maximum of 40 over 5 years on top of the baseline consideration. So I think I've summarised the key transaction highlights. Hope I conveyed how excited we are at Jervois. And I'll close there and just say, look, we own, after this last 235 mil equity raise, we put in about another $3.57 million ourselves. We've co-cornerstone the last 3 equity raises now with Australian Super. Strong thank you for our shareholders, Australian Super, sitting at about 18.5%, Australia's largest pension fund, $200 billion under management. We also have Freeport and Lundin on the register associated with this transaction. They wanted to retain upside to the future. And also we welcome Mercuria. So Mercuria, one of the largest commodity traders globally, looking to transition and pivot their business towards energy metals. And we're looking forward to being a part of that. And I think that there's good opportunities to work together moving forwards. Mercuria have come on at a similar level. So I'll close there. Enjoy the conference, and thank you very much.